Hi friends, 2-3 months ago I created a video on my channel, and this video we spoke about a very important financial rule 50-25-25, meaning 50% of your salary you can spend on your needs, wants, etc. Remaining 25% of your salary you should look to invest for your long-term goals. Long-term goals are those financial goals that you want to achieve after 5 years. It could be, for example, you're investing for your retirement, right? The remaining 25% money you should look to invest to meet your short-term financial goals, such as you want to buy a house in the next 2 years, such as you want to get married. So anything that you want to achieve within the next 5 years becomes your short-term financial goals, and for that you can invest up to 25% of your salary. But the biggest problem that people face is where to invest the money smartly that gives us very good returns at lower risk for the short-term financial goals, and this video is all about that. I will give you a very simple framework in terms of how to invest your salary for the short-term financial goals. So where to invest our salary to meet our short-term financial goal will depend on two factors. Number one is what type of investor you are. So there are broadly 4 types of investors. Investor number 1 is people who are ultra aggressive investors. Who are these people? These people are those people who want to generate annual returns of up to 60%. And at the same time, they are also willing to take risk of losing their capital by up to 40%. So these investors want high rewards. At the same time, they're willing to take very high risk. I call them ultra aggressive investors. Investor number 2 is aggressive investors. These investors have slightly lower risk appetite. So their risk appetite is only up to 20%. So they can lose their money by up to 20%, but at the same time, they want to generate returns up to 40% every single year. I call them aggressive investor. Investor type 3 is balanced investors. These investors want to generate returns up to 20% annually, and at the same time their risk appetite is low. They want to take risk maximum by up to 10% of losing their money. And finally, we have number 4, which is conservative investors. These investors do not have any risk appetite. They do not want even a single rupee to be lost from their portfolio, and they are happy to generate returns up to 10%. So where to invest our salary for the short-term goals will first depend on what type of investors you are. So please go ahead and make sure you know which type of investor you are, because based on your risk appetite and your reward requirements, we will decide which investment vehicle is most suited for you. Second parameter is your time horizon. So for short-term financial goals, we are looking to invest our money up to 5 years, but let's break it down further into 3 broad buckets. Number 1 is less than 1 year investing. Number 2 is between 1 to 3 years of time horizon. And number 3 is more than 3 years, but less than 5 years time horizon. So if we look at this grid, you will see that there are broadly 12 scenarios and 12 cases that I want you to understand, and try and plot yourself in terms of what type of investor you are and how long do you want to invest your salary for the short-term goals, and accordingly we will now discuss the options that you have in front. Before I start explaining you these 12 scenarios, you might have a very natural question that, Rahul, I want to generate returns of up to 60%, but I don't want to take any risk. Is it possible? It is possible only if you want to rob somebody or you want to go and buy a lottery ticket. None of that I will recommend. Please do not fall into traps of people promising you up to 100% returns safely. Nothing of that sort exists. Please make sure you are very sensible when it comes to investing. Nobody can give you 100% profits with zero risk. I can guarantee that. So let's pick the scenario number 1, which is you are ultra aggressive investor and you want to invest your salary for less than 1 year of time duration. What is your good option? So in my view, what makes really good sense is that 50% of your salary can be invested into stocks, and the remaining 50% of your money can be invested in momentum mutual fund. Allow me 2 to 3 minutes of time and you will understand pluses and minuses, risks versus rewards, and everything around it. First point is the stocks. Why stocks? Because stocks can give you very high returns, up to 60% in a very short period of time, provided you are willing to take risk of losing money up to 40%. And let me give you practical examples here. For example, what you see on my screen is a stock that I bought 6 months ago, Gujarat Themis Bison Limited. And this stock gave me 100% returns within 6 months. Again, I'm not sharing it to boost my knowledge. I'm just transparently sharing you that it is absolutely possible. People who are my YouTube community members, they know this because I transparently share all my investments with my YouTube member community. But the key challenge here is that you might also lose money. Let me give you that example as well. So what you see on my screen is a stock that I bought just 45 days ago, which is Star Housing Finance Limited. Fundamentally very, very good stock, but it fell by close to 40% within 45 days and I had to cut 50% of my positions, incurring the loss of up to 40%. So my point is very simple here. If you're investing in stocks, your risk appetite really needs to be up to 40% for a short duration. And many people say that, yes, Rahul, we can take this risk absolutely fine. But when they actually lose the money, there is a big problem. They will start commenting, they will start blaming others for their own decisions, right? So please make sure that only if you can pick good stocks and only if you have the risk appetite of losing the money, this option is for you. Otherwise, don't be into this bucket of ultra aggressive investor. Go for something like balanced investor that we will speak about in the few minutes now. Second important point about stocks that you need to understand is that many people think that only small cap stocks or micro cap stocks can generate returns of up to 100% or 80% or 60% within a short span of time. That is a very, very big misconception. Let me show you the data here. Let us have a look at Power Finance Corporation, PFC. The stock in last 1 year has appreciated by 200%. And guess what? This is a large cap stock. Another example, REC Limited, within a years of time, 281% appreciation, and this is a large cap stock we're talking about. Have a look at Varun Beverages, a stock from FMCG sector, which is supposed to be a slow moving sector. Have a look at it. In the last 1 year, 120% appreciation, this being a large cap stock. My point is very, very simple that if you know how to pick stocks and if you have a risk appetite of losing the money by up to 40%, then yes, you can absolutely go and invest your money. But let me also tell you that 90-95% of retail investors do not understand when to enter into a stock, when to exit a stock. So therefore, please do not blindly jump into this game. I am warning you that there is a chance of you losing the money. Therefore, if you're not comfortable with stock investing, then you go for other options such as small cases. Small cases are a curated basket of stock that an expert is picking on your behalf. The only limitation with small cases is that the subscription charges for the small cases generally are very, very high. And you only should consider that option if you have a high capital like 5 lakh rupees or 8 lakh rupees to be invested for a short period of time. Then small cases will make more sense for you. But again, I have given both the options for you. It is up to you to decide what you want to do. Let me now speak about the second component, which is momentum mutual funds. 50% of money can be invested in the momentum mutual fund. Now there are a few momentum mutual funds, and if I were to explain to you what a momentum mutual fund is, that itself will be a very, very separate video. So I'm not going to cover that here, but I created 3 to 4 very detailed posts on my YouTube member community. You can consider subscribing to my YouTube member community if you're very, very serious about learning and investing your money in a very, very practical and sensible way. Again, not a push here. Only subscribe if you are very serious about investing, right? Let me now give you a very quick walkthrough of why momentum mutual funds can give you returns of up to 60% and what are the risks involved in it. So I'm going to take an example of Nifty 200 Momentum 30 Index. And if I look at the chart of this index fund, what you will notice here is that from October 20 to, for example, October 21, the index went up from close to 12,000 to almost 21,000. This is a rally of close to 80% within 1 year of time, right? So one rally you can see clearly here. Second rally you will see is from here, October 2023 to March 2024. Within 6 months of time horizon, the index went up from 22,000 to close to 31,000. And if you do the maths, it will come out somewhere around 40% of appreciation within 6 months, right? The third rally you will see somewhere here from March 2023, it was at around 17,000 and it came up to almost 23,000 within the next 6 months, September 2023. Again, a very, very good run up within the 6 months of time. You can see fourth rally here for very short duration here from June 2022 to almost October 2022, an index appreciated by from close to 16,000 level to almost 20,000 level, right? My point is very, very simple. We can see very, very good rallies here in this index in the last 3 years. However, the risk is also there. For example, if you look at from here, 21,000 in January 2022, within the next 6 months, June 2022, it fell down from 21,000 to almost 16,000. So it can drop by 20%, 30%. That is also a possibility. So momentum mutual funds give you that high rewards, they really like anything, but when the things are not going well, they will come down very rapidly as well. So it is only for ultra aggressive investors that they can consider investing in momentum mutual funds. There are few categories of momentum index funds that you can explore, and accordingly you can make your own decisions. Let's move to scenario number 2, which is, let us say that you are an ultra aggressive investor and you want to invest your salary for 1 to 3 years of time horizon, right? What are your options? So in that case, I would say that go for investing in direct stocks for up to 80% of your money, and remaining 20% can go into momentum mutual funds, right? Here the key difference is the time horizon, right? You're still an ultra aggressive investor. You want to generate returns of up to 60% and you are willing to take risk of up to 40%, right? But here the time horizon is 1 to 3 years. So what are the good options here? You need to look for those stocks that are consistent compounders. Again, I would need a separate video to explain to you what consistent compounders are, how to find those stocks, what is the risk involved, what is the return expected from these stocks. But very quickly, I'll give you examples. Please do not take any of these stocks as recommendations. I'm just showing you examples here. So for example, have a look at my screen and you will see Tube Investments of India Limited. Have a look at last 5 years of the chart here. The way this stock has grown is from 360 levels back in March 2019. It has gone up to close to 3,500 rupees level right now, right? And if we calculate the CAGR of this stock, in the last 5 years, the stock has grown by a CAGR, which is an annual return of 60%, right? Now, this is the return that you want as an ultra aggressive investor, and you are willing to take that risk of losing money up to 40%, then in that case, you need to find consistent compounders like Tube Investment India Limited. Again, not a recommendation. I will reiterate it for you that this is not a recommendation. Please do not go and just blindly buy Tube Investment India Limited. That will not make any sense. Another example I can give you, Persistent Systems Limited. It used to trade at around 630 level and it is now at 8,400 level. If you calculate the CAGR of this as well, you will see it comes out to be close to 70% annual returns in the 5 years time horizon. Another example I can give you, Narayan Hrudayalaya Limited. Look at this chart here, grown like anything in the last 5 years from almost a level of 217 rupees to close to 1200 levels here. Do the calculation of CAGR, comes out to be 40% annual returns this stock has given. I can continue to speak about stocks, give you loads of examples, but the point is very, very simple here. If you want to invest for 1 to 3 years of time horizon, go for slightly higher exposure to stocks only if you know how to pick stocks, only if you know when to enter the stock, when to exit a stock. If you are not confident, do not go for stocks. Maybe small cases is a good option for you because they can generate very high returns at the same risk that you're willing to take for stocks. And keep your momentum mutual funds slightly lower here because stocks are likely to give you far better returns in momentum mutual funds. So accordingly, I have done this allocation of 80-20 here, right? Let's now quickly move to scenario number 3, which is if you are an ultra aggressive investor and you want to invest your money between 3 to 5 years of time horizon, right? So in that case, I would say that go for 100% of direct equities because the time horizon is 3 to 5 years. And if you are able to pick very, very good stocks, fundamentally strong stock, have a visibility of very good sales and very good profitability coming up in the next 3 to 5 years, then you can take your bets 100% on stocks, provided, again, let me repeat, provided you understand really how to pick stocks. If you don't understand, please do not get into it. But in that case, you can go for stocks up to 100% of exposure. I think I've covered these 3 scenarios in this video, which is ultra aggressive investor, less than 1 year, 1 to 3 years, and 3 to 5 years. This video is getting really long. I do want to cover aggressive investors. I do want to cover balanced investors. I do want to cover conservative investors as well. Let me know in the comments if you like this video. Number A. Number B is that let me know if you want me to continue make part 3 of this video as well, where I can cover aggressive, balanced, conservative. I will show you data. I will give you unbiased opinion as well. And I will more importantly warn you, give you caution of the risks that you will enter into. And without just understanding risk, if you're making investing decisions, my dear friend, you are gambling your money, and I do not want any of my viewers to do any gambling. I really want them to understand investing because this is all hard-earned money. This is our salary that we spend 8 to 10 hours every day battling with our bosses, battling with our managers, and then we earn this money. I really, really want you to be doing safe investing, sensible investing. And if you want to do that, hit the like button. Subscribe to this channel because I will bring you a lot of content at zero cost. With that, I will see you in my next video. Until then, keep rocking.